Let's do this. Attendees, let's see who comes in. Yep, good morning. Yep, we just opened the doors for attendees. And for some reason, I can't see people's names, but either way, as you come in, if you go to the chat box and you put the city that you're in, that'll help Joseph and I adjust the conversation to, it might be something regional that's worth grabbing onto, but just to kind of know who's in the room here. So as you come in, if you put your name in the chat box or your city in the chat box, we can get to know each other a little bit here. Yep, come on in. And this is going to be a small group, kind of pre-holiday. We expect about 10 people. Well, I wish I could turn on the microphones where everybody could interact a little bit more in the screen share, but don't have that ability. But I'm really happy about having Joseph here.
Well, these are going to be the people who are still plugging away and working hard, even though it's the end of summer and a lot of people have left.
Yeah, but non-stop. We're going to get it done. Yep, Todd, welcome. Boulder, Colorado. Love that state. All right, Ahmet, welcome to the event. The good thing about a webinar is everybody gets a front row seat, and hopefully make a connection that we can use to build our business together. So.
Well, I'd like to think our topic today is pretty relevant for people.
Yeah, I mean, the clients that you worked on with us, Joseph, I mean, you're doing God's work.
Thank you.
Brett, Todd, very good. Hey, Patrick. Patrick is a service member. He's leaving the Navy, man. Good story. So, Arizona, Julie, nice to see you. I was in Arizona in August, almost a couple of years ago, and it was warm. Love it. Burbank, California,
Probably an understatement with Arizona and California these days.
Yeah, I mean, a lot going on there, huh?
Yeah.
Okay, so we're 2 minutes after the hour. This is the group that we expected. We expected about 10 people, plus or minus. It's kind of the pre-holidays, so this is really good to give us some attention. Hey, throughout the whole event, by the way, my name is Kirk. If you have a question or when you have a question, to put it in the chat box. I'm gonna pay attention to the chat box while Joseph takes us through a learning experience. But to get things started, my name is Kirk. I'm the CEO of Foresight CFO, and in addition, I teach financial management to graduate students at Georgetown University. And I can't tell you how happy I am to have Joseph. He's the guy who, on the financial statements, that whole liability section, he's the guy who starts to take some weight off that, sometimes a lot of weight off that, so we can breathe again. And then, how to grow the company going forward from a growth CFO standpoint, what we do in accounting. So, Joseph, can you introduce yourself, and then we'll get things rocking and rolling?
Sure. Good morning. Good afternoon, everyone. My name is Joseph Muse. I'm the owner and founder of a company called Business GPS that I started 7 years ago, helping companies work through difficult cash flow situations. Took a different approach and model to it, and have probably had around 2,000 companies come through our doors during that time frame. So really focused on trying to find the right long-term plan and roadmap for people as they navigate difficult times.
Yeah, I'll vouch for you. You more than just, you can give it a shot, and you have a very different business model. I mean, you earn it. So, hey,
right.
To get a feel for even more so on who's in the room here, and it's great as you come in for new folks, if you put the city that you're in the chat box, and then use the same chat box to, interact with different questions. I'm gonna share a poll here, and if we can get, 70% of you guys and gals to respond to the poll, it'd be fantastic. Your responses are anonymous. And I'm going to share the statistical results so we all can kind of see who's here. But your name's not going to be associated with any kind of, your response. So that, yeah, if we definitely get like 50% or more response, would be fantastic. The first question is, what was your top line revenue in the prior year, right? And there's brackets, kind of where do we fall last year? And then the follow-up question is, this year with COVID, do you expect your revenue to increase, decrease, or stay about the same? So two quick questions to kind of give Joseph and I a feel for who's in the room and how can we, kind of share experience to do something better together. Okay, we're at 40, so if a few more people vote, we're in. 46, 53, fantastic. I'm gonna keep it open for just a few more seconds. But this is the year to vote. This is like practice, right? We're getting ready to go to the polls. Okay, so share results. And just take a look. So most of us are, 56% are kind of the smaller companies, 0 to 5 million. This is very relevant. I can speak firsthand that Joseph's helped companies in that range, and then the rest are the 5 to 10 million, right? And hey, in the context that only 4% of CEOs ever make it past $1 million of revenue, if you do that, you're in that 4% club. So excellent. And then let's see here. We got expecting the increase, 11% increase, 56%. Okay, the 60% decrease is almost like the economy. Overall, we're in a recession, so things are contracting. And about third, saying about the same. I mean, if you're in those two categories, you probably breathe a little bit better. Okay, so let's move on to showtime. Joseph, are you ready?
I'm ready.
Good. Let's go.
So with Business GPS, kind of as I was saying, I started this in 2013, and I tried to find a different model, and it was based on the experiences. I've been working for myself for 31 years. I started my first company while I was in college to pay my way through, and things were good. Things went well until the Great Recession of 08, 09, and during that time, my business went down. I went and I talked to my attorney. Hey, can you help me out? My attorney said, sure, pay my retainer. And if things get really bad, I'll protect you in court. And I went to my accountant and I said, hey, can you help me out? And the accountant said, well, you need to increase your revenue, Joe, and you need to decrease your expenses, things that I'd already done. And so I had to kind of learn on my own how to navigate these waters. And I remember thinking, if I had just had a friend, if I just had somebody who could help me, who had experience and said to me, Joe, don't worry. I know you're down to your last dollars. Don't worry about paying me. You can pay me later. Pay me when everything is done. Take care of me, and we'll do it on performance. So we're in this together. And I said to myself at that time, when I get back up on all my feet again, to build a business doing just that. And so that's what I did. And that's really the foundation of the business, is that we do everything on contingency. You're not paying me by the hour. You're paying me based on performance, which is typically measured as a percentage of the savings that I create or a percentage of the cash flow improvement that we create. So it's a very different model. I always worry about, how motivated is your attorney to help you when he's looking for his retainer. So anyways, that's the foundation of the model, and it's unique. I don't know of anybody else out there in the country that does it that way, but I think it's clear when you look at it, whatever is in your best interest, the company's best interest, et cetera, is always in my best interest. Our interests are always aligned.
Yeah. And Jose, I would add to that, you actually come across like a family member who's having that kitchen table conversation, because it's lonely when, the CEO is the hero when everything's going well, but the minute it gets really tough, you can't make payroll, you're not sure where the clients are coming from, it gets lonely, and a lot of times even depressing, right? Where you just don't want to get up and go face the toughness. So having somebody, and it is crickets. You go to a bank, it's crickets, right? A lawyer, CPA.
Yeah. Well, we know, Kirk, from some of our mutual clients, it's part of it is just being there to talk.
Yeah.
talk through things. Because as you said, it's lonely. Who's the business owner talking to? The business owner is typically not talking to employees or spouse or whatever. And so just to be able to be there, and it's a little bit of business coaching, it's a little bit of life coaching, it's a little bit of just listening, and trying ultimately to get the fear out of the person, because that's one of probably the biggest issue that I see in situations like this is the fear sets in. And then every decision you make has a foundation of fear in it. And I don't know about you, Kirk, but every decision I've made in my life that was based on fear has always been the wrong decision. So there is a big component of that, as you say, kitchen table conversation going on.
Yeah, very good. Want to jump into the next slide here?
Sure, please.
Huh?
So understanding the problem, that's a great slide, because that's the basis of everything. Understanding the problem. Hey, Joe, I don't have enough cash. Okay, well, why is that? Where's that coming from? What is wrong with the business? Where can the business be tweaked? That's not necessarily our role, but it's a great conversation. And Kirk, like I'm sure you see, every business is different. So it's not that I can say, hey, here's your formula for success. I can certainly say work harder and be smarter, but, you have to look at every situation and figure out what's going on. Now, in COVID times, it's easy to kind of point to what's going on out there in the marketplace regarding revenue. But even pre-COVID and post-COVID, there are problems that need to be fixed. And that's why the business got into the situation in the first place. And then, as you said earlier, I want to go look at that liability section. So part of our job, I try to keep everything simple, because as human beings, we overcomplicate situations. We're either buying time or we're reducing debt. That's kind of a simple way of looking at what we do. So then I look at your liability section and I go, okay, this is what you're paying now. This is what I think you should be paying over the next 3 to 6 months. And that will buy you X amount of time. That will buy you Y amount of increase in your cash flow. So I'm creating more runway for you being the business owner, to go out and create more revenue. And I think, Kirk, you probably see a lot of companies that are, especially these days, that are choking on their cash flow. There's just not enough going around.
Yeah. And that's, low profitability won't kill you, but we're not out of cash will, right? It's almost like obvious, but that's the thing that really, if you restructure the loans and get lower payments, keep more of the cash. And hey, Joseph, I want to highlight that toxic loans, because, if, for those of you who are out there, almost every day, every week, you get offers from, all these, services like Cabbage and different ones. Man, those are, when companies start taking on those loans, it's almost like a death sentence, because some of those, when you factor in, when you analyze the interest rate, they're paying 30-40% interest, on those loans. And it's, most businesses are not making that level of profitability to really pay back that type of interest. So it's when business owners start feeling desperate, they start grabbing onto these loans, red flag. I mean, that's the time to get in there and get somebody who's not afraid.
Yeah, and I think you're lucky if all you're paying is 30 to 40%. So what business owners do sometimes, they get themselves boxed in. Now's a perfect example of that, where the revenue crumbles a bit because of COVID. You're still paying the same bills, and then business owners, number one, we're positive people. We believe we can do. That's why we started the business in the first place. So we believe we're going to be able to work out of this. And then number two, because you've always worked out of it in the past. Maybe there's a false sense of confidence there. And then number two, business owners, we want to do right by everybody. Very rarely do I meet a business owner who says, man, I don't want to pay my bills. No. Business owners, we want to pay our bills. We want to do it the right way. But we can't please everybody. We can't serve everybody. So I try to come back around to again, let's keep it simple. because when fear sets in, a lot of times, again, our mind wanders in different directions, especially at night. We're laying in bed trying to figure out, okay, how am I going to get through this week? We need to keep it simple. We only serve one thing, and that's the business. That's it. Every decision we make is in service of the business. And so then when you're looking at your cash flow, you go, well, do I really need to pay that equipment loan right now to serve my business? The answer is no. Okay, so we're not paying it. And the first thing that I tell a business owner is sit down in front of your computer with an Excel spreadsheet. Kirk, you might say the same. And forecast your cash flow week by week for the next 4 weeks. And once you type in your revenue, spend your money until you get down to about 10% left and stop. And prioritize the spend on what you must have, the most pressing. I must pay payroll. I must pay a vendor to deliver my merchandise. And when you run out of cash, that's where it stops. Everything else gets negotiated. Everything else gets worked out. But that's where you stop your cash flow, and that becomes your Bible, your roadmap of how you spend money. Do you go through those exercises, Kirk, with your clients sometimes just to kind of go over it?
That's exactly. I mean, so one of the habits is, the best practice. We actually would say you can start with a bank balance, go to 4 weeks, but get to a 12-week forecast. So you have at least, approximately 3 months of visibility down the road. And even hedge a bit. Don't, based on, put some money aside even when things are tight, so that you have a reserve. So don't pay all the cash out, kind of stuff. But build that reserve up. So we see exactly that.
Yeah, and that's really probably how a lot of people started their business, with a very simple back of the envelope, so to speak, budget. Okay, this is what we're going to follow. And the numbers, using an Excel spreadsheet is great because it takes the emotion out of it. Numbers don't lie to you. You might have an employee you talk to, and they go, oh, Bob, everything's going to work out. Well, that's a wonderful sentiment, but is that accurate? Yes or no? It may not be, but the numbers don't lie. The numbers tell us the truth about where we should spend and where we shouldn't spend. And all the things on the list, and then some: IRS, credit card, bank loans, rent, equipment loans. We'll get into some specific examples later in the presentation, but all of those things are very, very negotiable, even in today's environment, more so in today's environment, because they're expecting that you need help. They're expecting that they need to give you time. And for a lot of these places, the people that you owe money to, they're overwhelmed with people who can't pay. So it's even hard for them, frankly, to keep up with when you made the last payment, how far in arrears you are, etc. So there's certainly strategies to it all, but the point is everything, and I mean everything, is negotiable if it's handled the right way. Let's go to the next slide, Kurt. Okay, so this is kind of stating the obvious about COVID. It's what business owners are experiencing every day. We talk to business owners across the country, different business models. I talked to somebody the other day who put on large concerts, and he's trying to pivot his business. He's closed right now, trying to reopen. We talked to medical practices who, had to adjust for patients coming in. So everybody has their own unique version. And so, again, what we try to get to is the core. And I guess one of the big things to understand in all this is the business owner's role, the way I see it, is that he or she needs to go create revenue, needs to stabilize the operations, and needs to make sure that they're following the Excel spreadsheet. Creating the revenue part is the most difficult part. I tell people 90 to 95% of the time, we do our job. Our job's the easy part. You want more time? No problem. We need to reduce your debt by $500,000. Give us some time, we'll get it done. But we can't create revenue. And so I think that's part of the reason why it's good to have a third party helping you, because right now you're very distracted. Right now you're putting out fires. Right now when somebody calls you in the morning and says, hey, you owe me some money, what's going on? and you might end up having a good conversation with them, but you hang up and you're still stressed mentally about that call, and then you're affected the rest of the day, when really your head needs to be in the game. Come on, let's go. Let's get this done. Let's build this business again.
Yeah,
so having a third party involved, it doesn't have to be Joe or Kirk, or it can be anybody, but having a third party involved to be the buffer so that you stay in the zone is really, really very important.
That's a good point, Joseph. It's a distraction. A lot of that stuff you're talking about, like, we have a question from Ryan that we'll get to about how do you open the discussion with a vendor to reduce the amount that's going to be paid. But you bring up a good point that when CEOs who want to pay their bills are having those conversations, it zaps their energy, and then it's that much harder to go out and do the sales side. Plus, your employees need leadership, right? They gotta see where are we going. What does this look like when we get there? Yeah, it's going to be different, but we're going there. So yeah, having somebody like you who can have those conversations, it kind of takes the heat off.
Yeah, it's really simple. The business needs twice as much of you right now. You're the lifeblood of the business. And when you look at even large businesses like Apple, one person left, Steve Jobs, and it almost fell apart. Imagine with your small business, that business is not going to run without you. So your business needs twice as much of you in its moment of need, but in reality, you can only give it half as much as you normally do because you're so distracted with people pulling on you saying, hey, where's my money? Or just the simple stress of it. So yeah, having a third party there is really very important. Kirk, do you want to get to Ryan? Should we get to Ryan's question now, or do you want to save that for later?
Yeah, it's Brian. I think we should get to it now. Okay. Yeah. So here's the question. How do you open a conversation with a vendor about paying a reduced amount? What's your opening?
That is a great question. So most business owners tend to keep information to themselves, right? Hey, if I'm having financial stress, I'm going to keep that to myself. I don't want anybody knowing about that. I want them to think that my business is crushing it, is doing fantastic, is financially strong and stable. And so you get to the vendor question, which is one of the dicier scenarios out there. It's a great question. And what I approach it with is frankness and kind of a human element to it. And by that, I mean, yeah, okay, I'm calling up John. John, I've been working with him for 40 years, for 4 years, for 2 years, whatever it is. John, listen, I need to have an honest conversation with you. And I've been buying from you for the last 4 years. You definitely want to emphasize the length of time you've been with that vendor. And you want to also emphasize how much money you've spent with that vendor. John, I've been working with you now for 4 years. I've spent about $610,000. Man, I can't thank you enough for everything that you've been doing for us. We've hit a soft patch here because of COVID. And what I need to do is I need to be able to get to some reduced payments because of what's going on. And all I can tell you is that, if you can help me through this period of time, I'm going to be as loyal a customer as you've ever seen moving forward. And based on, 4 years and X amount of dollars spent in the past, I do think over the next 4 years, I'm going to spend even more than that with you, et cetera, et cetera. So, and then something else you want to put in maybe is, listen, I've cut my other expenses. I've cut everywhere else I can cut. I'm not paying other people, but I'm paying you because I appreciate everything you've done for me. And, really hope that you're going to work with me on a reduced payment. So that's typically how I would handle it as a business owner and how I would handle it if I was a third party interceding, trying to help. So what are you doing? You're reminding the business owner of how much money you've spent and how valuable your account's going to be in the future. And you're making a human connection. Hey, I need your help. And they're going to typically drop their guard down a little bit and go, yeah, okay, I knew something was wrong. And that's the thing. These vendors know something's wrong. You've been slow paying them for a while. They already know it. All you've done is kind of reached out and said, hey, please help me. And most people, 90% of the time, most people will give you whatever you're seeking in return if they feel you're being sincere in your request. So anyways, that's how I would approach it. And that last piece about not paying other vendors, they want to feel like they're a priority. I'm prioritizing you. You're more important than everybody else. Man, without you, this is a line I use. That sounds bad. This is a line I use with people. Hey, John says, or Steve says, John, without your help, he wouldn't even be where he's at today with his business. Man, thank you so much. Really appreciate you. That's the kind of stuff that makes a difference.
Yeah, very, very human, very sincere, right? You're not playing games. You're not just not paying them because you don't want to. It's just I'm in a tough place. I need your help.
Right, and it's the exact opposite of how business owners are taught to act. We're taught to act cool, and the house might be on fire behind us, but we don't show that to people in front of us. When really it's okay because they already know it. They know on their aging. They've got their agings report. Hey, it looks like Steve's he used to always pay in 30 days. Now he's paying in 60 days. They already know it. So you're only going to improve the situation by revealing the issue a little bit and by trying to humanize the connection.
Yeah. Very good. One more question, then we can move on when you're ready. This is from Ahmet, where he asked, should we worry about the D&B rating being affected when talking to vendors who are not flexible?
No. To me, the D&B rating, every business is different. So let me put this one caveat out there. There are some businesses that are sensitive to the D&B rating. But for most businesses, the D&B rating has no impact, or other people will say, not even say D&B, just your business credit. Ultimately, if you got a small business under 20 million in revenue, they're not looking at the D&B rating. They're looking at you, the business owner, and your personal rating. So to me, when I'm looking at where do I mind taking the hit, I don't mind taking the hit on business credit or D&B. And I can always explain it because, hey, it's COVID. Some people got tight with me. They gave me a negative score because they were getting tight. Yeah, I think that's a very minor hit that you take with your business credit or your D&B rating.
Yeah, and just to kind of share experience, we work with hundreds of CEOs globally, and I really haven't seen the D&B come up literally in years, right? And potentially if you're doing government contracting, somebody might check the D&B report, but I haven't seen that. So I haven't seen the impact. So Ahmed, kind of a question to you, if you don't mind putting something in the chat box. Have you seen that in your business where your D&B rating's getting hit and your partners, vendors, customers, whoever might read the D&B report do you have people in your sphere who are actually pulling the D&B report and reading it? So I'd be interested in kind of what your situation is. Well,
and there are things you can do to mitigate or improve your D&B rating. So if your D&B score, if you happen to be in one of those rare businesses where your D&B rating has a material impact, then I probably would still be okay taking the hit. I'd have to look at what the alternatives are, but I'd be taking steps to work on fixing that at the same time so that whatever the hit is, it's offset by improvement. Credit score, just on a side note, credit score these days has become really critical for people who are applying for the SBA EIDL loan. And we might touch on that near the end. But there are a lot of things that you can do very inexpensively to improve your business credit, including your D&B score, and a lot of things you can do to improve your personal credit score, which is what most people are looking at when they're looking at extending your terms.
Yeah, the banks have that personal credit score, and Ahmed responds, not yet. The vendor are saying they're going to put them into collections, and but nobody's checked their D&B report. He just wants to be prepared. So Ahmed, you may want to use some of those techniques that Joseph is describing to actually address with each vendor what's going on, and that figure out something that could work for them.
Yeah, and I think just one other quick, there's so much to talk about here, Kirk, so I apologize if I'm taking up too much time, but collections firms are overwhelmed right now. They've got thousands of, their collections firms 6 months ago were already understaffed organizations where if most got an 8% or 10% collection rate, you know, they're happy. Now they've got maybe triple the files on their desk. And so collections firms are notoriously lazy. So what they do is they don't want to go to court. They don't want to work really hard trying to collect from you. So they love sending nasty emails and nasty letters with a lot of threats that 90% of the time, 95% of the time are not sincere threats. They're not going to follow through on it. But it's a cheap way and a lazy way of touching a lot of people and trying to instill fear into the mind of the business owner. So it can be impactful because you as the business owner are also operating out of fear. You go, oh my gosh, what if what they say is true in this letter? And I'm telling you that 90 to 95% of the time it's not true. They're sending out those letters boilerplate to everybody, and they're hoping for a 5% hit rate. And the hit rate I define as a business owner who picks up the phone and says, okay, I'm responding to you and your letter, which is how we would naturally want it. You know, okay, I got a letter in the mail. You're threatening to sue me. Let me pick up the phone and call you. But to a collection agent, what that means is, oh, okay, I've got fear in him. I'm scaring him or her into a reaction. Now I've got, so it's like having a fish on the hook. Now that they're communicating with me, that's going to be my easy target. The other 95% of the people who do not respond, I probably will not touch. I probably will not talk to. I might send some more emails or letters to, but that's it. So I guess that's a really long-winded way of saying you can't let those communications create more fear inside of yourself. 90 to 95% of the time, there's nothing to be worried about. Keep moving forward. Keep focusing on revenue.
Good.
Sorry, next slide, Kurt.
Mm-hmm.
Okay. So, you know, this is how we do it. It works for our model, but you can certainly use it internally with your business or with anybody that you're talking to. You know, again, as I said earlier, every business is unique. Every business is unique. Every human being who owns that business is unique. So, you know, I spend time on the phone with every client before even we get started. Tell me about your situation. Because we work on contingency, we also want to make sure it's a case that we can help you. If we can't help you, then, you know, it's not worth our time, your time, etc. So let's do an assessment. Okay, out of that assessment, we find goals. Where do you want to be? Okay, so it's easy to say, hey, 6 months down the road, a year down the road, this is where I want to be. But it's kind of like, I don't know, I equate it to a weight loss program. Hey, you know, somebody comes in and says, okay, I want to lose 50 pounds or 100 pounds or something significant. I want to reshape my body 6 months down the road, but how do I get started today? How do I get some wins today that will help encourage me and give me the added motivation of moving forward for that 6 month period of time? So we typically break up goals into phase 1, phase 2, phase 3. Phase 1 is immediate. Hey, this week, this is what we're doing. And we hang up the phone with a checklist. Here are the 5 things, business owner, Mr. and Mrs. Business Owner, I need you to do over the next week. You do those 5 things. We're going to talk again in a few days. I'm going to give you the next 5 things. And we're going to kind of keep going. Budget is really important. We talk about, again, buying time, creating savings. So we talk about, okay, let's get to that Excel spreadsheet. Let's look at the numbers. Let's see what you can and can't spend. Let's talk about what's choking the cash flow. Hey, Joe, I've got a big rent payment every month, $20,000. That's choking me. I've got a big equipment lease payment. That's choking me. So we talk about some of the choke points, and then it's just execution. You know, where do we go? You know, what steps are we going through to get to our end goal?
Yeah.
I think that's pretty straightforward. What's next, Kurt?
That's pretty good. And hey, Brett, to your question, I'm gonna bring your question in after Joseph goes through this part because it'll really tie it up the real life example.
Yeah, and so and I apologize, Kirk. To me, all this stuff is so relevant. Obviously, we're passionate about what we do. So I could give you your first 2-hour webinar because there's so much to cover, with these things. So to be a little bit more specific, we talk about debt mitigation, and you're right, there are some examples, I think, after this. Dealing with legal items, dealing with liens, dealing with toxic loans, dealing with vendors, accounts payable, credit cards. There's a comment there about being hands-on. We have to be hands-on because we have skin in the game now with the business owner. We're investing our time and our effort with them. And I'm a firm believer in controlling the things that you're good at. I think as a business owner, you look at it the same way. A lot of it's about control. So, let us control, the discussions. I want you out of the discussions. Let us control it. You go back to creating revenue. And frankly, if you're in the discussions, you may likely muck it up a little bit because you're emotional. And frankly, whenever you're negotiating with somebody, most of the time it's good to have a buffer in there anyways, so you're not boxed in. And then in terms of financial restructuring, creating a detailed analysis, assisting with cash flow, there probably isn't anything. It's a really unique space, Kirk. I mean, I've had 2,000 experiences with businesses that are roll up your sleeves, really doing battle. So there's not probably one thing out there that you could think of that we have not seen. I think we've seen everything. Yeah. And pre-COVID, I used to spend 4 days a week flying around, meeting people, seeing their business, et cetera. So, I think it's a unique skill set. Okay, next slide. So this is a really good piece. People come to me and go, okay, Joe, you can help with buying me more time and reducing my debt, but how do I get to more cash? That's what I'm lacking. And you mentioned it earlier, Kirk. You can go out of business for lack of cash. That's ultimately the most common way you're going to go out of business. You don't have enough cash. So, Kirk, you were talking earlier about some of those toxic loans where you're paying 30, 40%. Some of those are 100%. So we do have lenders that we work with where, they're not on, they're not sending you spam emails or making tons of offers for quick cash, but they're good lenders, and they're lenders for a company in a B grade situation. They can lend in a week's time. It's not like going through a bank underwriting. And even now, they give you the infusion, the cash infusion that you need. So, Kirk, I'm sure in your practice, 50% of your clients are probably looking for cash right now. Is that accurate? What percentage is looking for cash?
A good third right now, right? Which is
okay.
Much, access to capital at favorable terms is kind of where it's at. But the restructuring, there's been more interest in restructuring. Like, I think as a case study in the next slide, we can talk about the joint client we have, where there's literally $3 million of tax liability, and there's debts, there's, the penalties and interest are so high they can't service the debt. I mean, so it's just it's a tripwire, but we're seeing about a third that are really, which is much more than, last year, maybe 10%.
I tell you, a good place to get money these days is if you have, lenders are looking for collateral. So, you need to have something for them to hang their hat on. And some of that's cash flow, like those quick cash flow lenders. Some of it's your credit score, and some of it goes back to assets. So if you look at, and we have it on the slide, focusing on monetizing assets, equipment and accounts receivable, we have done more of that in the last 90 days than we did, I think, in any prior 90-day period. So there's still a lot of opportunity there if you're looking for working capital. If you can monetize equipment or receivables, that makes a lot of sense. Real estate, that's still very active and productive. Okay, Kirk, should we get to the kind of the real life? So this is, to me, this is the best part, because we get into helping people understand really what's possible. And when I say anything's possible, almost anything's possible. I've got a client in Virginia that owed $73,000 a month in a mortgage payment to a community bank on a massive old school printing facility. I think it was the biggest in the state of Virginia. And we got that community bank to give them 15 months without payment. So if you take 73,000 and you multiply it by 15, that's over $1 million worth of deferred. Now, if somebody had said to that guy, hey, I'll get the bank to defer over $1 million, or if I'd asked the bank, hey, would you mind deferring $1 million? Of course, the bank would have said no, but we got it done. So a lot of it is in how you handle it. The one at the top is a really good story. I'm still very hands-on with that client. I'm actually out in California a lot of my time. We started with that client. That's one. The business owner's in his 40s. His wife died of cancer. His daughter got cancer. I stepped in with 24 lawsuits, 2 IRS audits, and a foreclosure notice, and a significant amount of debt, around $14 million worth of debt. That was about 18 months ago, a little less than 18 months ago, and I've gotten 14 million reduced to 8, resolved all the judgments. The IRS audits cleared with flying colors, and revenue's up. So that has been a great story. The transport company, where it's being sued by a mid-sized bank for $800,000, ended up getting that settled for under $300,000. We do a lot with banks, have always done a lot with banks, do a lot with banks now. We can get banks to reduce the principal. We can get banks to reduce payments. We can get banks to give forbearance. We can delay foreclosures. Really, anything and everything is possible. It just comes back to the spreadsheet and giving guidance on, I need these numbers. What people tend to do, especially entrepreneurs, is they tend to overcommit. And some of that's an emotional response. Hey, bank, I owe you the money. I want to pay you. But instead of, what the business owner needs to do is look at that Excel spreadsheet and go, bank, I can only pay you within this box right here, $5,000. But what happens is the business owner feels guilty, maybe bullied a little bit, and goes, okay, I'll pay you $10,000. Well, then after 2 months, 3 months, you can't make payment again. So then the relationship's busted again, and you got to put the pieces back together again. That's more difficult. Credit repair, that's a great one. With credit repair, we're doing a lot these days with EIDL loans. The one area of rejection for people that the SBA is pointing to is credit score. And so we're reworking with people their credit score, and then we are resubmitting their EIDL loan application. And as a part of the process, we're able to not only improve credit scores, but we're able to remove some obligations. It's probably a whole nother webinar, but we're able to move some obligations in their entirety. So unsecured lines of credit, credit cards on closed accounts, if it's a very bad situation, we can essentially remove those obligations at their core so that you don't even owe the obligation in the first place, if that's what's necessary to keep the business open. So it's not just about credit repair in that case, but it's about actually removing the obligation so you don't have to pay it. I think we have one more slide there too, Kirk, of
examples.
We have one more slide. Yeah, okay. So restructuring, the cash advance, that toxic money. I can't even tell you how many we've done. I've had clients with as many as 22 cash advance loans. What's typical is 3 to 5. And Kirk, to your point earlier, once you take one, you know, it's the beginning of the end. So what typically happens is somebody will take 2 or somebody will take 3 to pay off the first one. Then you're taking the fourth one to pay off the second one. And it's a slippery slope. So we've got a lot of experience there. And again, it's all about, let's get to a number that fits your budget. It's not what they want to receive from you. It's about what you can afford to pay. So there's an example there, but we've got hundreds or thousands of those cash advance examples. Tax issues. Anything's possible with tax. Kirk, you and I know that firsthand with one of your clients. I think one of your clients was looking at or was told they had to come up with about $500,000 down, and we can, if you want, drill into that a little bit more. I believe that client realized after one conversation that they don't have to put any money down. They were trying to figure out how they're going to come up with $500,000 so the IRS didn't shut them down. And really the truth of the matter is the IRS wants to see you succeed. They're like an investor. You just have to show them a plan as to why they should believe you and why you should execute on it. I've gotten clients 20-year payment plans with the IRS. So anything's possible if you talk to them the right way. Landlord-tenant dispute, that's a small example. We deal with that all the time, especially these days. That's a common issue. So, I go back to everything's let's keep it simple. Everything is negotiable, and we just have to get the numbers to fit the budget for the business owner to be successful.
Yeah, it's really, really good. So we're going ready to wrap up. We're at that 5-minute window, so we're going to bring it home right now.
Okay, so FAQs, we deal with businesses of all different shapes and sizes. Contingency based, we talked about that. I think we're the only ones out there. I haven't seen anybody else out there in the U.S. that does it on contingency, decreasing balance, savings fee, et cetera. How do we get paid? So that's, I think that's all pretty straightforward, Kirk.
That's there. And definitely, we're going to send the slide decks out to everyone. Definitely download the slides. Keep Joseph's number, because I can tell you, 30 years of doing this kind of work, Joseph is unique in terms of his approach, but it really is person to person. And it's, people don't do this kind of work at risk, where it's performance only. So, but Joseph's been there and back as a business owner. So that's why he created this solution. We're going to definitely send this to you. Just kind of, tie the knots together. At Foresight CFO, this is what we do, right? We depending on where the business is at, we define the objectives and then use the numbers. Let's figure out how to engineer cash flow. Where do we need our debt to be? Where do we need our tax payments to be? Through engineering, and how much of a hedge can we build so that we can breathe, right? And then it's execution by the numbers, week to week, month to month kind of stuff. And we do that through growth CFO services and outsourced accounting. We do it through the habits, so it's always teaching and learning, that putting that financial acumen into how businesses operate. And likewise, definitely if you want to look at how do we increase profit in your business, how do we maximize the value of your business and alleviate dependencies so that it's transferable, which basically takes a lot of the weight off your shoulders, and it makes, when it's time for succession options, there's 7 of them available to you to really maximize your well-being. But on that whole part of your financial statement, the liabilities, the part that weighs us down, Joseph is the go-to guy for this. And I got one last question from Steve. Joseph, I want to throw it out to you. Let's see if we can answer this here, or if this needs something offline to unpack more. But Steve is asking, can you monetize triple net lease with large franchise as the tenant? And it's kind of second part of the question is, use the lease payment to gain a loan. I'm not familiar with triple net lease, but Joseph, is that question?
Yeah, that's actually, I had that question before, and we've tried a few times. It's not the easiest thing to do, but ultimately it comes down to the credit worthiness of the party paying on that lease. So if that party is credit worthy, then the answer is yes, you can certainly do that. If that party is not credit worthy, then it's not. But that's a good, just real quick, monetizing other parties' credit in your cash flow, your receivables or your regular payments coming in. If they've got good credit, that's a great way to monetize.
Good deal. So Steve, if that didn't fully answer your question, for everyone here, I mean, Joseph's your go-to guy, easy to talk to. So I would encourage you to make that call. We're at literally 1 minute, so I'm gonna wrap things up. But Joseph, I mean, thank you for doing the webinar, and thank you for the clients that we worked on together, because they can be tough situations, and we get there. We get them first. You see the light, and then we get up that mountain. So it's pretty good. So Joseph, thank you so much for being such a great partner.
You got it, Kirk. Always a pleasure chatting with you, and good luck to all you business owners out there. Keep up the fight, right? That's what's the saying? You never lose unless you stop. So we just keep moving forward. If I could be of any help, let me know.
Yeah, thank you so much, and talk to you all. Talk to you soon.
Okay.